Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Happiest Minds Technologies earnings. This mid-cap IT firm has posted its earnings with a 3% sequential fall in its net profit to 50 odd crore rupees. The revenue, however, has risen by about 12 odd percent sequentially to 522 odd crore rupees as well. What we've seen is that the operating margin has come in at 13.2%. The EBIT has stood at 69 odd crore rupees, which is an increase of 9% on a quarter-on-quarter basis. These are some of the highlights, but for more insights, let's go across to the top management of the firm to help us understand what has worked for the company and what's the outlook really going forward from here. Let's join in and welcome Mr. Venkatraman Narayanan. He's the MD and the CFO of Happiest Minds Technologies. Warm welcome to you, sir. And we'll also be joined by Mr. Joseph Anantharaju. He's the Vice Chairman and CEO of the firm. Warm welcome to both of you and thank you so much for taking the time out for this discussion. Let me start off with you, Mr. Venkatraman Narayanan, and I want to understand from you, how have you assessed the quarterly earnings? Has it met your own expectations this time around? And could you also take us through the key factors that actually drove the 12% revenue growth? And despite that, why has the profit seen some dip this time?
So the 12% revenue growth has come substantially from, the merger of Pure Software results and Obvious results, and our organic growth, which has happened over the last quarter. So it's a full quarter impact of that. That's giving us the 12% revenue growth. But at the same time, you need to also see that our EBITDA has grown by 1.3%, operating margin by 1.5%, and if you look at these metrics on a half year over half year, our revenues have grown 24% and EBITDA has grown by 13% and operating margin by 6.5%. So what we are trying to say is the business that we are doing together, Pure Software, RES and Happiest Minds, is not margin dilutive and it's adding to the margins of the company. You did talk about drop in net margins. The drop in net margins is on account of certain non-cash charges and the increase in interest cost, because you have to pay for acquisitions and there is an increase in cost, and that's led to the reduction in PBT. But while we look at operating margins, the key point to understand is that we have made investments in generative AI of close to $2 million in the half year. We have started our new sales engine, which is put in place early this year. We've got a team which is focusing on that, and we've also been through a pay increase cycle for a substantial part of the people of Happiest Minds. So if you compare that to markets, peer compares or other companies in the industry, most of them have either deferred or they have called off their increases, as you must have read in the press. So we have done all of these. And we are also investing in the business of AI, generative AI, which is a BU that we have set up. And it's despite that, we are still doing 22.7% EBITDA, which is in line with our 20 to 22% guidance that we have given.
Yes. Absolutely. So on that itself, I wanted to actually come in and wanted to ask you, you've already given us a 35 to 40% growth guidance for FY25 on the revenue front, as well as this 20 to 22% growth on the expectation on the margins front. Would you be sticking to that? Will you be having more levers to even better this guidance?
On the margin front, we are doing better. We are at 22.7%. And if all the investments that we are doing, they should pay off. And when they pay off, that's a margin lever, distinct margin lever that we have on that front. On the top line, yes, we are getting into typically the Q3, the third quarter is a difficult quarter, but we are still seeing growth. And we have now onboarded as part of our acquisitions, we have a very nice SaaS-ready software platform. It's a Artha banking platform, and that tends to be lumpy in nature, the sales or the revenues, and it typically happens in the Q4 or the fourth quarter of the year. So there is an expectation of a sales uptake from that, and then the new sales team that we have put in place, and GenAI, quite a bit of pipeline where we are expecting POCs to mature into real business. Or I wouldn't say real business, I would like to say long-term replicable business. all of this is expected to come in from Q4. And obviously, you would have heard industry participants also telling you that Q4 is likely to be better for the industry compared to how the early two quarters or 3 quarters of the year have been.
Okay.
So
On
all
that point, yes. On that point, yeah. Please
regarding
go
to
ahead.
do the 30% growth in revenues, we have done 24%, as you see, year over year, up to the half year, and we'll be still focusing on how to get to the 30%. That would be our focus.
Okay, point noted, sir. Let me also bring in Joseph right there into the conversation, and to help us understand the overall demand scenario right now as has been emerging. You pointed out Q4 is a expected better quarter, and with Donald Trump's return in the US after the elections, how are you really looking at the US market shaping up for you in terms of client spends? Do you think there will be some more loosening of purse strings? Already the indications of corporate tax reduction is coming in. Do you think that is going to help most of the corporates to loosen up the purse strings right there? The Indian IT sector, how is it going to be benefiting?
Sure. Yes, actually, I think that's a good point that you made. If you look at the base, I'll take the base for the demand outlook as the economy, US economy, and that's been doing well, whether you're talking about inflation, GDP growth, or unemployment. The economy has really been doing well. I think the uncertainty that people had was on the US election, and that's also gone in a very decisive manner. And the third element that's coming in now is the Fed rate cuts. We've had two sets already, and third one is expected in December. And as a result, what we've started seeing from customers is a more positive outlook, discussions around new initiatives, around leveraging data and AI more to drive value, to see how to use Gen AI for productivity or revenue growth. So all of these discussions have started. A couple of verticals where we're already seeing traction is in the BFSI space. You can see that the revenues quarter on quarter have grown. Part of it is the Aureus and PureSoft acquisition. Part of it is also market conditions. We're also seeing manufacturing and pharma, which are capital intensive industries, getting more traction. And with Donald Trump being more pro-America, I think the US economy will do well. And with Happiest Minds having a larger portion of its revenues from US, we feel we are well placed to take advantage of an improvement in the business outlook.
Okay, wonderful. Getting back to Mr. Narayanan, you did talk about the acquisition of PureSoft and Aureus, as you have highlighted already. By when will the strategic alliance be completed on all levels? By when do you see the peak potential on the revenue contribution will start to come in? And what exactly could be the peak potential there?
Aureus is almost done. It's part of Happiest Minds. In fact, in all respects, the integration is complete. As far as Pure Software is concerned, we have made quite significant strides in the integration process. Backend systems, as you see, we are reporting on a consolidated basis, and backend systems, ERP systems, they are all in place. Cross-selling, upselling processes are in place. Joseph is leading the charge to make sure that all of that is happening. But we would like to, still integrate the sales and the delivery teams a lot more, and that's what will happen over the next, I would say 6 to 9 months. You've got a period of 2 years for the earnouts and payouts and everything. So within the next 6 to 9 months, we should be in a place where we can truly say that we are going to market on a unified basis. You'll see the benefits really showing up.
Okay. Also, another fact that the company's raising of the 500 crores via QIP, could you get us an understanding of how this will be used for the growth initiatives, or maybe providing for the subsidiaries going forward as well?
So this was raised about a year and a half back, and that's what has been deployed in the acquisition of Pure Software and Aureus. So as of now, we are in a mode of digesting what we have. We have a significant amount of cash balance. I would say significant of cash balances on our books and free cash balance of about 500-600 crores. So we are still looking for acquisitions, but the current priority is to make sure that what we have taken on, we are able to digest that and get the benefits of 1 + 1 = 3 kind of a benefit is what we are looking to get from these acquisitions. And After that, we'll be back looking for more.
Okay, got that. Let's get in Joseph again into the conversation. Joseph, I wanted to understand a bit on the company creating this 6 industry groups, having an industry manager at each level. How are these, goals of restructuring really helping you out in your long-term vision? And if you could help us just understand what is the idea behind this.
Sure. So I think last year was a very transformative year for us because we put in
Yeah,
place three initiatives. One is creation of Gen AI business unit.
yeah.
Second is the formation of the industry groups with the industry group heads. The third is creation of the NN sales engine, which Venkat alluded to. And I think they all are interrelated because if you look at the creation of the NN sales team, this is a specialized team of hunters. People only get new logos, and therefore with the industry groups helping them, they're able to get deeper into domain, create larger deals, go after larger sized companies. They have the support system to do that now, right? And again, on the existing accounts, we have $82 billion customers. There's so much of potential in terms of improving our wallet share. And one way to do that is by demonstrating to the customer we understand their business, that we are able to not only look at technology, but also look at their domain and help them out with some of their business problems. And the industry groups come in over there again, right? And Gen AI is kind of a way to break into new areas, given that we are probably the only company that has a generative AI business unit.
Yes.
Now, the way the industry groups are working is we have an industry group head, and the sales, the client partners, delivery heads, and the domains are all aligned by the industry group. So they become one team rather than people coming from different functions and working together. So all the goals, objectives are common, and there's a higher level of collaboration while enhancing the domain expertise for each of these industry groups.
Okay, let's get in, Mr. Narayanan, also on the Gen AI bit, which you also alluded to one of your earlier answers. Just wanted to get a sense of how has been the initial performance been. Is it possible to quantify the kind of contribution we are seeing from Gen AI
Yeah.
business to your top
So
line and bottom line, or in future, what is the kind of
our
sense we can get?
we have shared the segmental results for the Gen AI business unit. We have done about 2 crores, $2 million of revenues, and that is at a significantly lower level of utilization. A services company like ourselves,
Okay.
utilization is a real big lever. Gen AI is running at about utilization of about 20 to 25% kind of a number. So the rest of it is essentially investment. So despite having a $2 million, direct and influence revenue, we are investing close to 2 million, because had we positioned this in, the other parts of the business, you would have that kind of revenues that you would have got, along with the profit of 40-50% in terms of gross margins. So that's why I say that we have made quite a bit of investment on that front, and which has to now start paying off in terms of longer term customer associations and deeper customer relations, and higher revenues and related profit.
Okay, Joseph, let me bring you in. You've already articulated as a company that your long-term target is to achieve that $1 billion in revenue by 2031, and you're banking on Gen AI a lot to achieve that target as well. Along with Gen AI, how is the expectation on the other verticals as well? What will be the key driving factors for you to be able to reach that by 2031?
Yeah. So, I think Gen AI will become, with all the investment we're making, expectations will become a significant portion of our revenue in the next 3 to 5 years. Outside of that, I think the industry groups, by creating this group, I think and having the NN sales engine, which are all tied up to hit that $1 billion mark, will allow us to go after larger deals, increase the per customer average revenue, and therefore bring in some optimization in terms of our sales costs, in terms of delivery and execution costs. And just the fact that we're having larger accounts will allow us to get to that $1 billion mark. The third element out here will be our acquisition strategy.
Yeah.
We made these two acquisitions, which are very strategic actually. It gave us three advantages, right? It gave us insurance for Aureus, banking and capital markets for pure software. So BFSI story really strengthened, which is one of the largest verticals for most of the Indian IT services companies, and so it allows us to play in a larger area now. The second was in terms of revenue diversification. Both Aureus and Pure Software have some customers in Africa, which we can tap into. Pure Software has feet on the street that we can leverage. And Pure Software has quite a bit of its revenue coming from Southeast Asia. Again, a fast growing place, Indonesia, Philippines, Singapore, Malaysia. So that helps in the revenue diversification and gets us into some high growth areas. The third is on the IP or the banking platform that Pure Software has. And we in our strategy sessions we've been looking at. Right now they're in more of Southeast Asia and in Africa, and we're looking at how do we take it to India, how do we take it to North America, what are the investments required, and we expect that to become a good, significant portion of our revenues. And we'll, as Venkat pointed out, we'll continue looking at acquisitions in a very strategic manner, which should also help towards hitting that goal of $1 billion by 2031.
Okay, got it. Mr. Narayanan, on the deal pipeline going forward from here, what is the visibility that you already have for the rest of FY25 and of course in the first half of FY26 as well? And could you also highlight for us if you've added any key clients in this quarter going forward? How are you looking at the meaningful contribution coming in from top 5 or top 10 clients of yours? Are they going to be continuing to provide that steady support?
I think I'll probably take that question.
Okay.
Because if you look at our growth, I think as we had said, we would do 30% growth for this year, and our confidence in being able to meet the number for this year is the build up in the pipeline, which is something that we are tracking very closely. The business outlook also has given us that confidence that I talked about a little earlier, and what we've been pushing the NN sales team, which is coming together. Half the team is in place. The leader came on board in August, and they've already built a pretty good pipeline on the NN side. And on the existing customers, the bandwidth of our BDMs who are not part of the hunting team is being freed up, and we're asking them to focus along with the industry group heads on specific accounts where we can take on some aggressive targets and hit those numbers. So both of these, I think, give us the confidence that we can continue driving our pipeline and be able to meet the revenue guidance that we had provided for the year.
Okay. Mr. Narayanan, just lastly, just to help us understand what are going to be the hiring trends and the attrition, are you okay with the current levels right now? Do we see improvement on the attrition level, and what is going to be the hiring outlook for H2 as well as for the first half of FY26?
So as of today, we have this quarter, we had our attrition pick up slightly. The trailing 12-month attrition is at about 14.5%. We have about 700 open positions, which I did mention in our conference call as well. It helps us build for the demand that Joseph was referring to in the pipeline, and also to do a little bit of backfill. We have taken our fair share of apprentices, campus hires, lateral campus joiners, however, so that you use that as a lever for the pyramid that we're working on, and we have training of those people in progress. So there is hiring happening across our locations to fulfill these open positions, while also planning for the future and addressing the the pyramid that we talked about.
You can actually give us an outlook going forward from here in terms of the kind of expectations that we can build on, at least for the next 2 quarters, as far as the operating as well as EBIT margins are concerned. So these are the 2 things that are important for us to really track.
So as of now, we are sticking on to the one number of EBITDA, which is 20 to 22%. We are at the half-year mark. We are at about 22.7% ahead of that, and I'll focus on that number. Operating margin is a number that we started disclosing from this quarter because we needed to take away the noise of other income, which you would have noticed. So we are trying to get that a trend on that, and then start commenting on that front as well. So we will then go back to talking about operating margins, so that's more business related. And we have also into even, giving out numbers of cash EPS rather than
Yes.
the normal EPS, because that gives you a flavor of how we are doing as a share for our shareholders. Because the EPS hides more than what it talks about.
Okay, wonderful. Well, thank you so much, Mr. Narayanan and Mr. Anantharaju, for being with us on this special edition to detail for us the quarterly earnings and the insights right there. I wish you all the best for the upcoming quarters and see you around soon at the end of the third
Thank you.
quarter as well. Many thanks for being with us on this special.
Thank you very much.
Thank you. With that, viewers, we wrap up this very special conversation with the top management of Happiest Minds. I hope this has given you enough and more clarity and color with the way in which the management is looking to drive the industry, the company going forward from here. The guidance on margins front, revenue front, staying put with the long-term targets on creating that $1 billion mark as far as revenues are concerned in 2031. I hope this has given you enough more insight. Do mention in the comment section, is there anything else that you'd like to have discussed in terms of the entire IT sector and the outlook is concerned. Many thanks for joining in.